Now, if you think all investing is the same, you are drastically behind the curve. Let's talk about two major differences that could change. So, in this economy, there are two major ways to invest in a company. You either go the public route, which is buying shares of a company, or there is something called private equity that is the silent fuel that really brings in the real profit. So let's talk about the difference. Now, the public stock market are things that you already know, right? So if I were to open my brokerage account and I buy shares of Tesla or Amazon or Microsoft, I am actively investing in the public market. It's public, meaning I just had to give my personal information and I got access to these companies and their potential growth. Now, on the inverse, there's private equity. Now, private equity is the ability to invest in companies essentially before they go public. So when you hear companies with these wild evaluations, oh, this evaluation such and such $1 billion, such a billion, you know who makes those evaluations? The private equity investors that are already invested in that company, and they're getting the return. And the major difference between the two is that you can get into the public stock market with $10, right? There's even penny stocks. We all saw The Wolf on Wall Street. But you're not getting into the private equity market with your $10. That's $1 million and above plus connection. Listen, if we want to continue increasing our investment game, we can't play one game. We got to be multifaceted, multi-diverse, and go after these money in all the ways that it flows in our economy.